There's a $195 billion opportunity hiding in plain sight, and it starts with understanding how small business owners are really funding their growth. Welcome to the Commercial Pulse update for July 8th, 2026. The Experian Commercial Pulse is a bi-weekly report offering a snapshot of the US economy and its impact on small businesses. We hope you find these bi-weekly updates insightful. Remember to hit subscribe to continue seeing us in your feed. June unemployment held at 4.2%, the lowest in a year, though job creation slowed sharply to just 57,000 in June. Headline inflation climbed to 4.2% in May, with energy prices up 23.5% year over year. Crude oil has since pulled back below $78 per barrel following a ceasefire agreement, offering some near-term relief. Small business optimism fell to 95.3 in May, its lowest since October of 2024, and consumer sentiment, while rebounding slightly to 49.5 in June, remains more than 18% below year-ago levels. On a brighter note, the ISM manufacturing PMI marked a sixth consecutive month in expansion territory at 53.3, a resilient signal in an otherwise mixed picture. The Experian Small Business Index came in at 51.2 for May, down 1 point from April, but 6 points higher year over year, and firmly in the stable range. Delinquencies improved on both the consumer and commercial side, though rising credit utilization and a spike in consumer public record filings are trends worth monitoring. The index is stable, but the environment calls for close attention. This week, the Pulse takes a closer look at the types of financing small businesses rely on and what Experian's data reveals about the gaps, the risks, and the opportunities for commercial lenders. More than 87% of small business owners use personal funds to finance their operations, according to a Untapped.com survey of 1,000 small business owners. The three leading sources are personal savings at 67%, loans from friends and family at 13.4%, and home equity products at 6.9%. Small businesses are drawing on personal assets long before they access commercial credit, and that's the gap the market could close. Experian identified $195 billion in consumer card balances held by business owners with no business card at all, with average balances of $8,996, roughly 62% above a typical consumer. These owners are behaving like commercial borrowers. They just have not been given access to commercial products, and that's the conversion opportunity. When business owners do access commercial products, cards dominate, accounting for over 78% of monthly originations. With spend projected to reach $1.06 trillion by the year-end 2026, term loans, lines of credit, and leases make up the remaining 18%, with fintech lenders gaining ground through faster, more accessible underwriting. Average balances have grown across every product since 2023. Cards are up by 19%. Lines of credit are up 31%, and business leases leading all products at 83% above 2023 levels. Smaller, newer businesses rely most heavily on cards, while leases and term loans concentrate among other more mature firms. And there's a lot more on our study of small business financing in this week's report, so be sure to subscribe. If you would like to deep dive some of our industry insights, reach out to your Experian account team. And if this update was helpful, please like and subscribe to support our channel. Last, remember to keep informed, to stay ahead, and we'll catch you on the next one.